Okay guys, today I came with another video, but today I came with another pair USDJPY, and then I will show you how and why and when I took a trade in USDJPY in February 17, 2026. So before getting to the detail of the trade that the reasons of the trade that I took, before that, let me tell you some clues about my strategies. Firstly, most of the time I look for my bias in a higher time frames like 4 hours, 15 minutes, 30 minutes, 1 hour, and then sometimes 1 day. But most of the time I look for 4 hour because it gives me a good information about the market. So secondly, after I know my bias, I will go down to lower time frame and then for confirmations like 15 minutes or 30 or 1 hour. And at last, I will go down to 3 minutes or 5 minutes, but sometimes rarely 1 minute for entries. So today I entered in 30-minute time frame, and I will show you why and how I took this trade in a 30-minute after knowing my bias in a higher time frames. So let's go to the video. So firstly, let's go to the 4-hour chart. 4-hour chart. And then let me show you the detail that I see before I entered this trade. So firstly, as you see here, the market was in the last January days. In the last days of the January, the market was in a bullish momentum, as you see here. So once it reaches here, this break of block, the market returns back to the downside. But let me show you one thing here. This is a change of character in this market, because here the market was in a bearish momentum, but once the market reached here in this zone, the market returns back to the upside and then change its direction to the upside and then started to take higher highs rather than lower lows. So here, after the market took this low, there are a lot of liquidity levels here below this level. So once the market took these all liquidity levels, the market reached an extreme order block in the 4-hour time frame here. So once the market reached this zone, I look for change of character and then break of structure in that higher time frame for my bias. So here, as you see here, the market took this high and then started to take higher highs rather than lower lows, as you see to the here. So after the market took this change of character liquidity level, I didn't take directly from this order block. I look for further confirmation. So this confirmation is a break of structure. So once the market taps this extreme order block level, like the weak level, the market returns back and then took this higher high, and then this higher high is called a break of structure. So once the market took this high, I expect the market to this order block, this unmitigated order block. So once, let me zoom it and then let me show you here. Once the market reached this zone, I go down to 30 minutes. Yes, a 30 minutes. So let me show you here. So this order block is the 4-hour unmitigated order block. So once the market taps here, as you see here, the market was forming lower lows and then it's in a downside, in a bearish momentum. But once the market taps this order block level in the 4-hour in the 30-minute time frame, the market took this high and then formed change of character. So once this change of character is taken, I look for entries So this order block was the first entry that I look, because once the market taps this passive order block, it tries to go to the downside. Look, this order block was once an order block before being breaker block. So the market tries to to make this order block an active zone and then go down and continue to the downside. But the buyers get higher and then stronger than the seller, so the market continues to the upside, making this order block a breaker block and a passive zone. So it's not active. So this order block level is my first entry here, and then I put my SL here, and then I target 4-hour liquidity level, like 5. I will show you at last, 1 to 5. And then once the market took this high, I look for re-entries, for additional entries. So here, so this was, and then below this, and then this was the trade that I took in this day. So thank you and subscribe.